Okay, stock market rallies. P rallies right into the 78.6 Fibonacci. I'll show you the chart. The Dow was up 69 points, up 0.15%. The S&P up just almost 1/4%, to get a rally of 17.5 points. NASDAQ up just under 0.5%. Russell down slightly, pretty much flat. The VIX rose by 5.5%, 5.56%, back above 16. Important things going on this week. We're going to get the jobs report, the private payrolls, initial claims, a lot of economic data for the labor market. There's a risk of a government shutdown. That could be part of a catalyst for volatility, but you never know with those things. Markets, 70% chance predicting a government shutdown. Sometimes these government shutdowns, you get a lot of volatility with them. Other times, a little bit of volatility. Other times, the market just shrugs it off and ignores it. We don't know if there is a government shutdown, how long it will last. Will it be for weeks, a couple of days? What's going to happen? Sometimes, not always, but sometimes, government shutdowns rattle the market. Eventually, the politicians hammer out a deal and it ends. But could it be a catalyst? Maybe. We'll see. I think the labor data could be more important, even if we avoid a government shutdown, or if it's a day or two and they out some kind of deal. Get the jobs report on Friday. If the government is still open, if we get the jobs report, this could rattle the markets, whether it's positive or whether it's a strong report or weak report. Now, according to CNBC, the Labor Department won't release the jobs report if the government shuts down on Friday. So, and with the Labor Department putting out so many fake numbers for years now, we'd probably all be better off just guessing. It'd be better than the fake numbers that they've been putting out. Nevertheless, I digress. The jobs report, if we get it Friday or shortly thereafter, if there is a government shutdown and we get the data after that. Right now they're saying they're not going to do it on Friday if the government shuts down. If it ends up getting released anyways or whatever, and if there is a government shutdown right now, they're saying no, but if that changes or if we get it later or if they avoid a government shutdown, again, we'll be watching. If the jobs report comes in strong or extremely weak. Right now, it's expected to be weak. It's expected to be 45,000, previously 22,000, but it's supposed to be another weak jobs report. If we end up getting the jobs report on Friday or shortly thereafter, there ends up being a government shutdown. If the jobs report comes in strong, the market's going to sell off because, again, why does the Fed need to cut? We've already seen the GDP revised up at the strongest pace, the strongest and fastest pace, ticking higher in 2 years. All cited at Jackson Hole. Well, the reason why we're going to get cuts now, why there's a shift in risks here, because we had weak GDP and deterioration, weakness in the labor market. If the jobs report starts coming in strong, then there's no reason for the Fed to cut. That can rattle markets. But if it comes in really weak, start getting more negative numbers, market could sell off on concerns of recession. It's a lose-lose situation. We'll sell off with the strong report. We'll sell off with the weak report. So keep that in mind. The unemployment rate is supposed to come in at the same at 4.3%. And again, a weak number is the estimate at 45,000. So we'll see. And again, does a government shutdown markets for a little while? Avoid that, or is it the labor data, or what? We'll be watching. Is there a government shutdown October 1st? Did we get the jobs report on Friday or not? We'll be watching all this stuff. We're still going to get the private payrolls, which is also supposed to be a weak number. Private payrolls, 40,000. We're expected on Thursday to get the initial claims, which again, before the Fed cut, it was 263,000. It's been dropping. Last week, it was 218,000. Really, the question becomes, do we see improvement in the labor market, or do we see continued weakness in the labor market? And then we'll see, do we get this economic data or not? Does the government shut down or not? We'll be watching all of this. Friday, we came up, rebounded back up on Friday. Gap down Thursday, went back up to fill the gap. We went up to the 61.8 Fibonacci installed. gapped higher on Monday, and we slammed up into the 78.6 Fibonacci, moved just beyond it, and this is the Fibonacci's from this decline right here, and we overthrew it just a little bit, and then we moved back to try to fill the gap. Just fell shy of doing that on a closing basis. We did it on an intraday basis as far as reaching the intraday high from Friday, but we didn't fill it on a closing basis. That's the dotted blue line you see right there. So do we have this gap being a gap and go, a gap and fill, or a gap and trap? Right now we're trying to fill the gap here. So I don't think we've got the gap and go where you gap higher or just keep going. So you either got a gap and fill and then we can resume the advance, or you've got a gap and trap where you gap higher and then you begin to move in the other direction. We'll be watching. Do we get a lower high below our peak from last week? That high gave us a doji candlestick in the weekly time frame. I talked about that. In order to have a reversal, you got to confirm that doji candlestick. So again, right now, slamming up into the 78.6 Fibonacci. NASDAQ 100 got further above the 78.6 Fibonacci, gapping higher, turning back down. We did not attempt to reach the gap fill area. Again, every time you see a gap, you got to ask, is it a gap and go, a gap and fill, or a gap and trap? Here, we had a gap and go. You gapped higher, and you just kept going. Here, we came down here, we gapped down, and you had a gap and trap. And on the intraday charts, we moved in the other direction. Gap and go, a gap and fill, or a gap and trap. And sometimes you fill the gap and then resume the advance. So we'll be watching to see what this gap here today on Monday ends up being. This is the 60-minute chart of QQQ. The chart was the 60-minute chart of the S&P 500. Please support the channel with the link directly below that allows me to be able to provide you this information. If you like the charts, you like the indicators, please let me know that by supporting the channel today. Follow the link below. Follow the link below to take you to a secured site and you can donate any amount you want. I just ask that you do that rather than have sponsors and sell you stuff. They contact me all the time. I don't want to sell you anything. If you could take a moment to help out, I would really, really appreciate it. Watch the video all the way through. I'll show you what's going on with the signals, what I'm looking for. Talk about the VIX in a second here, but again, with the government shutdown, rally to form a divergence on the NASDAQ and S&P on the RSI in the daily time frame and celebrate, oh, we've avoided a government shutdown, or do we get it and end up getting volatility? With the bullish insight day here we got on the VIX. Warning signs last week, but they have yet to be confirmed. You'll see those warning signals later in the video and swing trend signals. Take out Thursday's lows. My signals will all start turning bearish. Last Thursday's lows. So watch the video all the way through. I'll show you some very important indicators. The VIX still has the MACD in positive territory. Started to turn down, now it's turning back up, and we get a bullish inside day. We had the wide range bar on Friday. We dropped back below the 50. We're back above the 50, the green line today on the VIX. A bullish inside day is a reversal pattern, but again, the candlestick means nothing. The pattern means nothing unless it's confirmed with a surge above this candle's high, the wide range bar, and we get back above the upper band. The band tightening is telling you something big is going to happen soon. And has formed, being tight, and we've only seen more mild sell-offs during the summer, but it's leading up to something bigger. We saw the MACD turn positive. The time we had that happen was when we had that massive sell-off at the February peak. Do we see something similar to that right now with this bullish inside day? So the candlestick has to be confirmed. It's a 2-day Harami pattern, a bullish inside day. You get a wide range bar down, and then you get a bullish bar that stays within that wide range bar, confirmation above this level. So do we see this surge, as I've talked about, with the MACD going into positive territory and our push above the 50-period moving average? We got a bullish reversal pattern, possible reversal pattern on the VIX. Showing you that up close on the MACD so you can see what's going on here. The MACD is still in positive territory. It turned down, now it's turning back up. If it remains in positive territory, then we could see volatility increase. Right now we're back above the 50. We dropped below it. We had a breakout. We dropped below the trend line. We dropped back below the 50. Now we're back above them. Do you see this? In what looks to be a back test of the bullish falling wedge breakout there on the VIX. Over here, we got above the 50 period. We moved into positive territory and immediately saw volatility surge. Over here, you've had a breakout, a back test, and now a possible bullish inside day on the VIX, warning that we could see an increase in volatility. If the S&P sets up a lower high, start to see a surge in volatility moving back up towards this other trend line I've marked right here, this channel, and the 200, we start to move up there or even bust up through it and start seeing a huge surge in volatility like we did back over here when we got into positive territory at the MACD, and like we did over here when we dropped into negative territory and firmed up, and we got the next leg down in the market with that surge in volatility. So I'll be watching what becomes of this bullish inside day. With that bullish inside day, we get the RSI pushing back up into positive territory to dip down on Friday with the drop on the Friday's price action. Still holding above 50 here on the stochastic. So again, we'll be watching. Do we get a surge in volatility before the week ends surrounding the government shutdown, or maybe the jobs data if we end up getting it? So just some things to be paying attention to. The warning signs on the VIX. The MACD in positive territory, the VIX back above the 50 period moving average, the tight Bollinger Bands here breaking out of the compression pattern, the bullish falling wedge, all warning something big is going to happen. Volatility is going to spike, and at some point we're going to see some kind of bigger sell-off than what we've seen so far in the market. And just quickly, here is the bullish Harami. This is what the VIX got on it today. Friday we had the wide range red bar, okay, and then that was followed by the inside day, the green bar, and that's what we had today. This is a bullish Harami with that inside day. That is a bullish reversal pattern. But it's got to be confirmed with a close above the upper boundary of the first day of the pattern, the big red candlestick. It is a bullish Harami. But as I always say about candlestick patterns, it means absolutely nothing unless it is confirmed. But this is the pattern, the reversal pattern that is setting up on the VIX as the VIX gapped back up and got back above the 50 period moving average. When the VIX is above the 50 moving average and stays above it, bad things start happening on the S&P. So we'll see if this pattern can get confirmed or not. With our doji from the weekly chart and our spinning top on the NASDAQ. Again, we're slamming into major resistance. In order for the candles of indecision to mean anything, to be reversal candlesticks, we have to get confirmation this week. We get that with volatility, maybe with the government shutdown, maybe with the jobs report, private payrolls. We'll see what happens. Got the trend line going back here to 2018. Blue trend line connecting this low and this low parallel boundary, and we're slamming up into that. The red trend line excludes the shadow here and touches all these points right here. That's the trend line where I think we're eventually going, but again, we could turn off of the blue trend line here and have a small correction or big correction before we go higher towards the red trend line. But we are hitting the trend line from 2018, the upper boundary of the channel. We're hitting the trend line from the 2023 low here that, again, slightly excludes this level, and connected to this low, we've slammed right into that. Wow, NASDAQ 100 slamming up into the trend line from the 2020 low, and that's forming the upper boundary of a large broadening formation. Again, every time we've hit this trend line in recent history here, had a sell-off, nearly 16% here, nearly 26% here. That was the decline we had in the early part of the year there, early 2025, to the April low. So you get this massive broadening formation. We're likely going to get a reaction off of this trend line as we did over here and over here. NVIDIA has a massive broadening formation as well. As we're hitting these trend lines, you get these candles of indecision. S&P, we got a doji looking candlestick or maybe a sloppy spinning top, but Right now we've got a lower high. If we get rejection at the 78.6 Fibonacci by the close, if this candle's to mean anything, breaking the 3-week winning streak, if it's to mean anything, we've got to close below it this week. Close below last week's low. S&P weekly right here. Candlesticks have formed right at those trend lines of resistance. In order for the candlesticks to mean something, we've got to see a confirmation, a reversal happen. Same is true for the S&P or the NASDAQ. This is the weekly chart. Again, a spinning top candlestick, breaking the 3-week winning streak. Again, will it be confirmed by the end of the week? And we close down below this low right here. Last week's low will confirm that as a potential reversal. Continue higher, we could still get a divergence in the daily time frame in the most recent price action on the RSI. And here is the NASDAQ 100 daily chart. Again, if we try to go up and challenge that high, you still might get a divergence here. Now, you may not. Over here at this bottom, at the April 7th bottom, there was no divergence. We just reached an extreme. Well, over here we reached an extreme. Do we form a divergence and then just turn? Or does the extreme mark a peak? We'll be watching if we go above the highs from last week, which was the spinning top on the NASDAQ weekly chart. The S&P got more of a doji looking candlestick. So we'll be watching those for confirmation or not, and then I'll be watching, does a divergence develop here or not, or do we come back down and start taking out this trend line and the 10-period moving average, which is right there. Pardon me, the 20-period moving average, the blue line right there, and I just brought it up right here. The 20-period moving average is support right now. We did get back above the 10-period, but that 20-period is an important level of support. We break down below the 20-period moving average, then you have the 50-period here, you have your cloud down here, and then we have our 200-period moving average. We have horizontal support. Again, I talked about last week, if we get a similar drop to what we had in July of 2024, drop 16%, that would take us beyond the 200-period moving average. Do we get a more mild pullback than that? Do we get, hold above the 200? Do we pull back to it? Risk is that we reverse something much uglier. I don't think so, but I do think we'll see a bigger pullback than what we've seen so far at the trend line of resistance that I showed you. The MACD is not yet rolled over, so we still may try to form a divergence on the RSI in the most recent price action. We'll be watching. Do we see the stochastic curl up and the RSI curl back up here and get these divergences at our most recent price action, or do we confirm last week's high as a peak? The video was up today 2%, helping the market. There's still risk of it coming back down and going towards its 200 period. We have a possible expanded flat kind of a pattern. In this larger broadening formation like NASDAQ, you get a 335 pattern, you push down, you come back up, and you move above this high right here. Maybe we're not done with that, and then you come back down and you take out this low. That's an expanded flat, which very well could be the case. You got a 3-3 pattern, 335 pattern here, which is possibly in play. A 5-leg push down would take us down towards our 200-period moving average. The NASDAQ did get the bearish crossover on the MACD. The S&P got it. The NASDAQ did not, pardon me. But again, same thing here. The S&P, if the high holds, then we needed to take out that 20 period. We're bouncing off of it. The 20 period's a blue line. If we end up coming up and slamming up into this trend line and then going down, then you've got yourself a divergence right here in the most recent price action before going down. So again, do we see that happen? And then you have these multiple point divergences going on here in the daily time frame. It was multiple point divergences that led to this sell-off of 21% right here. Again, if we sell off, I don't think we go down 21%. I think we go back here towards the 200, towards the 100, towards this horizontal support level from our February high, or the cloud here. These are some of the levels I'm looking at, and the Fibonacci's, which I showed you the Fibonacci's over the weekend in the video. Keep in mind, as we're hitting the trend line from the 2018 high, come down here, you can see that. The early 2018, there were two peaks. The second one went a little bit higher, but the first 2018 high, you're forming this divergence on the stochastic. as we're hitting that level. So again, and we also are hitting the trend line from the 2023 low. But again, in order for a reversal to happen, the candlesticks at these resistance levels have to be confirmed. Watching to see if they are or not. Start the week off with the NASDAQ 100. It was down. It was up. It was down last week, breaking the winning streak. It was started up here, going up to the overthrowing the 78.6 Fibonacci. But you start the week off with the stochastic rolling over, and again, you've got that same divergence that the S&P has got going on there. So again, we'll be watching these stochastic divergences in the weekly time frame end up giving us a sell-off back towards the 20-week here, the blue line, the 50-week, the green line on the NASDAQ and the S&P 500. Remember, the 10-year yield has this bullish falling wedge on it. And again, if we end up seeing it break out, it's turning down off of it right now, but if we end up seeing a breakout and yields rise, the market could fall. Often they have a negative correlation. Oftentimes the 10-year yield bottoms, which bottomed out with the Fed rate cut. Oftentimes, and it's been rising ever since the Fed rate cut, turning down off of this trend line now, though. Oftentimes the 10-year yield will bottom out and start to rise ahead of the market peaking. Oftentimes the yield will bottom before the stock market tops, which again, if the stock market starts to sell off here, eventually we could see a breakout of the bullish falling wedge. Here's what today's price action looked like on the 5-minute chart. The gap higher, came back to try to fill that gap, didn't quite make it there, and ended up up 17 points, but not at the highs of the session. We're going to sell off. You got to take out the 200 period moving average. If we're going to continue to rally, you got to take out today's high. Challenge last week's high. We turned off of that upper boundary of the rising wedge last week. We turned it down. We stalled under the 61.8 Fibonacci. Now we're just over the 78.6 Fibonacci as I'm showing you in this video. So again, do we turn down, get a lower high, or do we go up and try to challenge this high? If we do, we'll form another divergence in the most recent price action on the NASDAQ and the S&P. Now this divergence right here gave us the sell-off at the upper boundary of the rising wedge, along with the 2023 trend line and the 2018 trend line in the weekly time frame. We've come down, we've rebounded back up just above our 50 period moving average here in the 60-minute time frame, closing right in the cloud right here. If we turn down, you need to take out this low. You need to take out this low and start moving to test the 200 period moving average here. And to get a sell off, you got to take it out. If we challenge this high, then watch that daily chart. We'll see a divergence develop on the RSI, slime up into resistance again in the weekly time frame. Trend lines I'm showing you. NASDAQ rallying up again, just like the S&P to the cloud and to the 50 period. We had an overthrow of the 78.6 Fibonacci and the 60-minute chart. I'm showing you that in this video. And we got back above the cloud here, back above the 50. So again, is it a gap and go, or is it a gap and trap? We'll be watching the low here and the high from last week. Last week on September 23rd, last Tuesday, I got warning signs of a possible reversal. Now, it may just be a smaller pullback, and we may get another topping signal if we form a divergence on the RSI in the daily time frame. But if this high holds and we get a lower high and you start selling off, and our highs hold from last week, if our highs hold from last week, then you got a shot at confirming the doji on the weekly chart as a reversal candle and the spinning top on the NASDAQ as a reversal candle. So do we end up forming the divergences on the daily chart and going up, moving slightly higher into the resistance levels again in the weekly time frame, and seeing the RSI in the daily time frame make that lower high and diverge? Or do we validate a lower high? S&P just overthrew the 78.6 Fibonacci as I'm showing you this video, and we get a lower high and we start turning down. Today you get a doji cross, a candle of indecision. This could be a continuation or a reversal pattern. Over here, it was a short-term bottoming signal. The candle of indecision we got today gapped higher, we sold off, went back to try to fill the gap, and then we rallied back up near the open, and that gave us this doji cross, a candle of indecision. While my signals flipped bearish last week, this rally, I have no bottoming signals yet. The signal has yet to be confirmed with my swing trend signals turning bearish, and I covered that in Sunday's video. Let me just move this here so you can see. Again, we have a major sell signal there. So far, it's only given us a pullback. You could get back-to-back topping signals. That's possible. If this is to play out, we got to see the doji get rejection at the 78.6 Fibonacci, and we got to come back down, and we got to take out last Thursday's low. Now, remember, Bitcoin already got these reversal signals right after the Fed meeting, and we already began to break down the rising wedges and get a bigger solve. We've sold off about 8%. Bitcoin's trying to rebound right now back to a downward trend line. If you want to see my latest Bitcoin video, I'll link the video at the end of this one. Pretty interesting, but the market eventually play catch up to Bitcoin. We got the reversal signal last Tuesday on September 23rd. The rally back up, no bullish signals, none. No bottoming signal. So again, do we end up getting a lower high? Again, a candle of indecision like on the S&P. We got here a possible gravestone doji up above the 78.6 Fibonacci and then turned back down. Got to confirm that candlestick tomorrow. If we're going to have it produce a lower high, you've got to confirm it and close below it by tomorrow's close. And then eventually come back and take out Thursday's low right there. And well, I got these signals, and there are no bullish signals back up. Well, I got these reversal signals. They have yet not been confirmed. In order to validate these, I've got to see my trend signals and my momentum signals all turn bearish. That has not yet happened. My swing trend signals and momentum signals are still bullish with the September rally. So either we're going to go up and go make a new high and form a divergence on the RSI, or a gravestone doji here gets confirmed. You go back, you fill the gap, and we start getting an ugly sell-off, maybe with labor data, maybe a potential government shutdown. We'll see what happens. We get a lower high and then a lower low, or do we go back up and try to form a divergence and slam up into resistance one more time? So will my signals be validated with the swing trend signals? We have to take out last week's low in order to flip the signals to bearish. Signals have been consistently bullish for the S&P 500 since the bottom. We saw a little bit of volatility after the July 31st peak. And since then, signals have been consistently bullish. Nasdaq had a little bit more volatility than the S&P. It dropped 4.28%. We had a couple of sell signals over the summer after the July 31st peak, but then again reverted back to bullish with the September run-up. So again, we've got to take out last week's lows if we're going to see signals turn to bearish. Nasdaq daily chart. Nasdaq daily chart, signals back to bullish, hanging in there. S&P, same thing. If we take out Thursday's lows, you're going to see a lot of signals turning bearish. Nasdaq daily chart, again, we take out Thursday's low, the cloud flips back to bearish. The signals have been bullish for most of the time since the April low. A couple of periods of volatility in the summer. Nasdaq daily chart. So if the warning signals that I got last Tuesday, if those are to play out, it has to be confirmed here by the swing trend signals taking out last Thursday's low and turning to bearish. S&P, it's been bullish ever since the bottom most of the time, except after the July 31st peak. Nasdaq, we had a little bit more volatility throughout August. Signals remain bullish. Reversal signals that I've got last Tuesday play out. They have to be confirmed with these signals turning back to bearish. Far that hasn't happened. What happened this week? Last week's doji on the S&P, was that the start of a reversal bar, the spinning top on the Nasdaq?